All right, welcome in. We're going to talk through some of the different opportunities you have within your first $105,000 in income. If you're married, filing joint, take that divided by 2 if you are single. So thinking about your biggest tax opportunities, if you file as a single taxpayer, up to about $50,000 to $55,000, that's where you have massive opportunity for significant tax planning. Or if you're married, filing joint, up to $105,000. So first and foremost, why is that? Let's pull up the tax brackets here. So this is from kitsis.com. This is an incredible resource because what it does is it matches the tax brackets both for your income as well as for your capital gains. Always critical to remember. If you have assets in a 401k IRA, those are going to be subject to income tax rates. Whatever you take out of a 401k pre-tax or a rollover IRA, going to be subject to income tax. And so you have the income tax rates here, married, filing joint. You have individual tax brackets here on the left. Now, capital gains. So anything you have non-retirement account, a brokerage account, investing outside of a retirement plan, you have completely different tax brackets. And you have different tax rates on those brackets. So 0%, 15%, and 20%. As you can see here, I made a quick note here. The 2021 rates are just over 80,000, both for income, ordinary income tax rates, and for capital gains. It's about 81,000 and change for income, 80,800, I believe, for capital gains. But I wanted to still include this picture, even though it's from 2018, 2019, because it does a great job breaking down just how critical this is. Now, one other huge note, always important to remember, your standard deduction gets added to this. So you might be looking at this thinking 105,000. Well, that's not the number that the tax rates show. 105,000, we get that from about 80,000 on the income tax rates and capital gains, plus your standard deduction. So 80,000 plus 25,100, that's where we get the 105. Why is this such a big deal? So I want to zoom in here if I can. Perfect. Income tax rates. You're only paying 10% and 12% up to that income level. Now, if we go over here to capital gains, that is a 0% tax bracket, and it's not talked about very often, but you do have an opportunity to harvest gains. And in the IRS's eyes, you are actually still paying tax on those gains. So you report them, you file your tax return, but those gains in that bracket up to 78,750 as of 2018, 2019. But again, today, that is just over 80,000 plus the 25,100 standard deduction. Any gains harvested in that level are going to be taxed at a 0% tax rate. So you're able to harvest those gains tax-free. Huge opportunity. So here's a quick example. If we think about if we think about your assets maybe being split between 401k IRA on one hand and having significant brokerage assets outside of a retirement plan. So this is a pretty incredible way to break this down. Now, first and foremost, let's talk about Roth conversions. If you don't have a big brokerage account with a lot of capital gains, you also have a large IRA 401k, you may want to do more Roth conversions than this. And so obviously if you're in a situation where almost all of your assets are in a 401k pre-tax and you don't have nearly the amount in a brokerage account, you'll probably want to go far above this on your Roth conversion. But if your assets are split, if you have considerable IRA 401k assets and you have significant brokerage assets with embedded capital gains, so let's just throw some numbers out there. Let's say that you have 2 or 3 million in a brokerage account, but your cost basis is only 1 million. So you've put in 1 million over the last 20 years, but that 1 million has grown to 3 million. And let's say in the IRA side, you've got 2 million in a 401k or IRA. So maybe that's the combined value of your pension, 401k, pre-tax assets. Well, for your first 105,000 in income, and this is, again, huge opportunity when you retire and you don't have income anymore. Huge opportunity to do a $45,000 Roth conversion. Where does $45,000 come from? Remember, we have a 25,100 standard deduction, so that is not taxed. That's the standard deduction. You're not going to pay any tax on that. And then we have a 10% tax rate after the standard deduction. So 25,000, that 10% tax rate is about 20,000, that bracket is. So we have 25,000 plus another 20,000. You can do about 45,000 as a Roth conversion, and your average tax rate is going to be just over 4%. So think about how incredible that is. Getting $45,000 a year into a Roth, growing tax-free, and all that you had to pay on that, if you're able to get rid of other income, is just $2,000 on that. So effective rate's about 4.4%, your average tax rate on that. But it doesn't just stop there. So let's say you do the $45,000 Roth conversion, massive opportunity in doing that. But now let's remember we've got a brokerage account, and that brokerage account has, I think my example was $3 million brokerage account with $1 million cost basis. So you have embedded capital gains of $2 million. You could harvest 55,000 in capital gains every year. So let's say you sell about 80,000 in your portfolio, but of that 80,000, 55,000 is a capital gain. Well, 55,000 in capital gains is subject to the 0% capital gains tax rate. We could actually make this much easier in my example if we just assume that your brokerage account had 2 million, just like your IRA, and your cost basis was 1 million, so just a 2-to-1 ratio there. It's doubled what you put into it. So in that case, you have 55,000, so you could sell 110,000, but only 55,000 would be gains. So you could actually generate 110,000 of tax-free income. You could sell 110,000 in your brokerage account. The basis is only 55,000. So you put in 55, your gain is 55, but remember that 55,000, if we keep it at this level, let's go back to this bracket, you're going to be harvesting, because of the standard deduction, you're going to be harvesting there at the 0% capital gains tax rate. So even though you sold 110,000, if the capital gain of that 110,000 you sold was only 55,000, and you were able to not incur additional income other than the small Roth conversion of 45,000, you got this entire capital gain at the 0% tax rate. And so you converted 45,000 to a Roth, you harvested 55,000, so you sold 110,000, 55,000 of it was gains, and the only tax you paid was the 2,000 on the Roth conversion. For an average tax rate on the Roth conversion, that's just absolutely tiny. Now think about doing this over a 10-year period and just how powerful this could be. If you do this over a 10-year period, you've converted $450,000 into a Roth. But that's what you've actually put into the Roth. If that Roth is invested aggressively, as it should be, we haven't even taken into account what the earnings would be on that. Think about $450,000 and what the potential earnings and return on that could be over the coming decades. And remember, what did you pay on that? Well, you paid about little over 4%. So the total tax bill that you paid over 10 years is only $20,000. And again, why is this possible? Well, it's because the greatest tax opportunities you have are your first $105,000 in taxable income. That's the way the brackets are structured. You have a really low income tax rate, and you also have a 0% capital gains tax rate. So unbelievable Roth conversion opportunity there. But let's also remember, we also harvested capital gains. And so 55,000 a year over 10 years, this means you harvested over 550,000 in capital gains at the 0% tax rate. And so massive opportunity there. And, you know, I've done some videos on this. What is the tax rate that your assets will be exposed to? So one question you need to ask is, what is your personal, your future tax rate that you're going to be susceptible to? But a better question is not just what tax rate are you going to be susceptible to, it's what tax rate will your assets be exposed to. And so that really brings estate planning into the conversation. But remember, with a 401k IRA, if you have a substantial 401k IRA, 7 figures, most of that IRA is going to face a reasonable tax rate, 10 to 25%. But if you have a large IRA, 401k, it is very likely that part of that, depending on where tax law goes, depending on if taxes are higher 20, 30, 40 years from now, or whether they're lower, there could absolutely be a portion of your 401k IRA that is susceptible to a much, much higher tax rate. And, I just put 30 to 50% here. It's also not impossible. Some of you could easily have exposure to a future tax rate that's above and beyond that, depending on where tax law goes. But again, why is this such a big deal? Well, because if you can make those sound decisions in your first decade of retirement when you don't have income, that's why it's such a time-sensitive opportunity. If you can get rid of all your income, and a huge point here is if you own dividend-paying stocks, well, you're largely wasting your biggest tax opportunity on receiving those dividends. And so if you're adamant that you continue to have dividends, simple solution: put your dividends in your 401k IRA so that they're not taking up this maximum income bracket opportunity. And so, again, 10 years of Roth conversions, $450,000. Your total tax paid would be $20,000. And so think about, if you have a large 401k IRA, the question to ask is what tax rate are those assets going to be exposed to? And the likely answer is when you have $450,000 into a Roth IRA growing tax-free, that is likely saving you from a much, much higher tax rate down the road. And so this could be just an absolutely enormous opportunity. But again, it just has to, it's a situation where you have to understand that if you're single, your first 50, 52, 53,000 in income, or if you're married, your first 105,000 in income. That's where the greatest opportunities are, because you have ultra low income tax rates, 10, 12% here. It almost doubles above that to 22, 24. But then capital gains. Huge opportunity here. If you have brokerage assets with embedded capital gains, there is a 0% capital gains tax rate. Let me know if you have any questions.